The people who say that Trump doesn't understand economics might want to stick around and listen to why this is such a big deal. The yuan is China's currency, and the yuan falling in value is probably the worst thing that could happen to China while they're dealing with a property crisis.
What this gentleman was pointing to is he was like, the Chinese yuan has fallen to its lowest level in 18 years. And we are winning the tariff war because China's currency is depreciating. China's currency isn't like a lot of the other currencies that we talk about here. It's not like the euro. It's not like the sterling. It's not a free floating currency, and that has not been its history the same way that all those currencies are. Starting around the mid-90s, the yuan was pegged to the US dollar at a kind of artificially low rate. And what's a peg? Well, if you basically fix the exchange rate of one item to another and don't allow it to fluctuate with market forces, that peg kept China's currency artificially low and allowed it to grow massively into the exporter that it is today. In 2005, there was one day where they announced an incremental revaluation. And they said, okay, we're no longer just pegged to the dollar. We're going to be pegged to this basket of currencies, and we're going to float, but we're going to stay within this relatively tight range. And we're not going to tell you what the weightings of the currency in those baskets are. But mysteriously, when all other currencies in the basket are down and the dollar's up, the yuan is up. People have called it like a dirty float or like a crawling peg. And then over the next better part of 20 years, we've had this, is it floating? Is it not? With periodic revaluations. The Americans have regularly accused the Chinese of being currency manipulators, devaluing their currency to try to boost themselves as exporters. So what's happened is, since we announced these tariffs, this young man's argument was, this is going to force their hand into some kind of stimulus internally. They're going to have to bail out what they've already been supporting and propping up through policy interventions. He may not be wrong on that front, but I want to be very clear that that's not happening in a vacuum where the US dollar is not also being devalued. So we are losing together. And the central tenet of so many people who say, oh, well, this is all part of some master plan, are all saying, but by the way, the Fed needs to bail us out and provide some kind of stimulus and provide easier monetary policy. So we've now got two economies where you may need to have some kind of stimulus whose currencies are both crashing. And all it does is hurt investors in those economies and its citizens.